Hello and welcome to Market Call. I'm Michael Hainsworth. For the next 30 minutes, Rob Lauzon's here, portfolio manager at Middlefield Capital, taking your calls and email messages on energy stocks. All right, so oil, gas, I guess nat gas is significantly out of favor, but I've had a peek at your top picks today, and you're playing in some spaces that actually play in nat gas. How do you feel about the commodity?
Well, for the next couple of months, it could very well go lower. We're in this shoulder season. Just to go back here, we basically had a non-existent winter, so that's your major driver of consumption and demand throughout half the year. So that's basically deferred our bullish call on natural gas by about a year. And now that we exit, landed here last night in Toronto and 25 degrees, no one's using gas right now. So that'll probably continue here through, obviously through April, and we'll have too much gas in storage. Now, there's a lot of fundamentals happening that we think will take that gas out of storage over the next 8 months as we get into next winter, and we'll see better pricing. But for the next 2 months, we're really into an abyss and an unknown, and I think that's going to provide a very good opportunity. It's really the washout trade is going to occur in the next 2 months, and that's when investors want to step into gas stocks.
What about the crude oil component? We've got a whole host of factors at play even today. Iranian sanctions, Saudi Arabia saying they'll open the spigots a little bit wider if necessary, and fears that $100 plus is going to slow the global economy.
Yeah, we think oil prices are too high, and from a fundamental perspective, we think the front page news of Iran is probably $10 in itself, just traders putting in that risk premium. If and when that becomes page 10 news or not even talked about, you'll have $10 taken off the oil price. We do have good information that the Saudis are actually ordering tankers. There was an article in the Financial Times earlier this week, and we do think that's occurring now, where the Saudis are ramping up production to over 10 million barrels a day and putting that into the refineries across the world to push oil below $100 a barrel. So we love oil long term, but we think there's a major oil correction potentially coming here over the next 6 months, as oil probably gets to, now this is Brent I'm talking about, going from 120 down to below 100. So WTI at 95 is probably going to 80, 85, which is still a robust price, and I'll talk about that throughout the show and how that affects the stocks. But there's some downside for just a commodity over the next few months.
Before we take a break, $1.3 billion deal, Penn Growth paying via shares for NAL. How do you feel about that deal? I'll be talking to the man at the top a little later on. What should I be asking him?
Talking to Derek?
Yep.
Yeah. Basically, I think you want to ask him where his CapEx dollars are going to be for the next couple of years. Is he going to focus on Cardium, Swan Hills, or his SAGD oil sand projects, and where the growth is going to become?
Do you like the deal?
I do. I know I'm not pounding the table